Hi, I'm Craig Wilson. If you're purchasing a home, whether you're a first timer or an experienced buyer, you're almost certainly trying to sort out a mortgage, right? And that can be a real hassle if you're doing it yourself. Well, one way to eliminate that hassle is to take on the services of a mortgage broker. But do you know what a mortgage broker actually is? Is there a cost involved? What do they do? Well, to unlock those questions and many others, I'm joined today by Jonathan Watts from Simply Finance. Welcome in, Jonathan. What's a mortgage broker?
Thanks, Craig. Always good to be here. What's a mortgage broker? Well, there's a change in title for a start. We're now no longer called brokers. We're called advisors, financial advisors or mortgage advisors. And that's come about with some change in government legislation. Whereas a broker used to take your money and pass that money on to a provider, brokers, we're not that. We're advisors. So we connect the client with the bank. Okay. And work between the two. So we specialize in getting mortgage finance. We know what all the banks are doing. We have relationships with most of them. We will prepare an application for clients. We will craft their information and answer it in a way or present it in a way that the banks need to see it. We can analyze what the client might need to clean up before they go to bank. But basically, we have the relationships with the bank. We know the best place to take the deal because everyone has different requirements, different things happening in their lives, and different banks have different appetites for different things.
So you go to the banks on my behalf, if you like. So you're the one that goes to each of the banks and tries to get the best deal for my mortgage. Is that right?
Yeah, we do. We have our clients sign what's called a mandate. And it's not a contract. It's a mandate that gives us permission to speak to the banks or the lenders on their behalf. And so if they don't like our haircut next week, they can just go away.
Right.
We go away. There's no binding relationship here, but we need that authority to be able to talk to the banks.
So if I'm engaging you to go and do that, am I paying for your services?
No, absolutely not. That's the interesting part about being a mortgage advisor and the kind of service we provide our clients. They don't pay for it. The banks pay us. For processing the loan with them. So we obviously work really hard to get lending because that's the way we get paid.
So the winning bank is the one that actually pays the service.
Yeah, they do. Yeah. They do. But I should emphasize and strongly emphasize that there's a lot of focus now on, and we had this as part of our ethos anyway, very much customer focused, customer centric decisions. So it's not just about placing a mortgage so we get paid. It's about making sure the client gets the right outcome for them. And we're passionate about that.
There's lots and lots of different types of mortgages. I mean, I've bought houses over the years and there's floating rates and fixed rates, offset mortgages now, which I have no idea what that is. What should we be going for? Or how do they know which is the right mortgage for them?
It comes down to their personal circumstances, and that's part of what the advisor can do. We can give them far more advice around the structure of their lending and what they should fix or float or offset or revolve. And more than advice than a bank will give. So, for example, Craig, revolving credit, it's like a giant overdraft on your bank account, and it's actually part of the mortgage loan that the bank's given you. And your goal of that is to pay it down as fast as you can, but you can use that money too back up to its limit.
So a bit like a credit card in a way?
Yeah, kind of go, well, better than a credit card because it's not 22%.
Absolutely. Yeah.
It's a floating rate.
Yes.
But the balance of that account will go up and down, and you'll charge interest on the daily overdrawn balance.
Right.
So the more money you cram into that account, the better. But you also retain that ability to access what's available, which is really important. If you're a spender, it's useless because you'll keep spending up to the limit.
Keep another boat always in the driveway.
Absolutely.
So does a revolving credit loan still have a fixed term on it? So is there a day it has to be paid off?
Yeah, it does. Yeah. And I should say there's probably a couple of types of revolving credit loan. There's non-reducing. So say it's $150,000 limit. It will always stay at that limit. There's other ones that will reduce slightly over the term of the loan, which is kind of good to push people down.
Because it encourages you to pay
it down.
Yeah.
Because ultimately you're going to have to clear that loan at some point.
Yeah.
But they work really well for people who are good money managers because they will pay that revolving credit down and then take the chunk of money out of that and drop it on their big mortgage and pay that down and then start on the
because you can mix up your mortgage, can't you? So
Absolutely.
You can have some of it fixed, some of it floating, and some of it revolving.
Yeah, absolutely. And it's what works in your circumstances and your money personality as well, because everyone has a different sort of money psyche, money personality.
Right.
Generally, some are spenders, some are savers. If you're both spenders, you're in trouble.
So I have no idea what an offset mortgage is. I've never had that.
Yeah.
Is that easily explainable?
Yeah, not every bank offers them. There's only a couple that offer those, but they allow you to have, if you've got a good savings and you don't want to just throw that into your mortgage, the bank will allow you to offset that amount of savings against some of your loan.
Right.
So you're paying an interest rate on the money you're borrowing, but they've offset that against. It's like a revolving, but in a different way. It's actually keeping the two things separate, as opposed to the revolving credit that's all kind of in one account. But they're a good thing if you've got high cash reserves.
So if I come to you as a mortgage advisor, what sort of information do you need from me before you can go off to the bank?
Everything. So
But I've only got to do it right once, right? I don't have to do it a whole lot of times.
Yeah, that's a really good statement to make, because that's the beauty. Sure, you can go to a bank yourself, but my question would be, why would you? Why wouldn't you use a mortgage advisor? If you go to a bank and do it, you've got to fill out their form, answer all their questions. Then if you want to go and check what another bank's doing, you go and do the same thing all over again. Good luck if you can find a branch that's open, and good luck if you can actually find a lender in the branch who can actually do that for you. And if you want to try and phone the call center, if you've got an hour to wait, fine. But you see us at a time that's convenient to you.
Yeah.
We gather all your information, and it's things like 3 consecutive pay slips, 3 months bank statements, 6 months saving statements or mortgage statements, 3 months credit card statements, any car loans, personal loans, whatever else you have. So we need all that background. And I basically say to my clients, treat me like a priest. Confess everything to me. Tell me all about what's going on in your life. And we actually end up hearing probably a lot more than an average person would hear, or a bank. And we obviously manage what the bank needs to know, what they don't need to know. They don't need to know everything.
No surprises later.
Absolutely. Yeah, you don't want any surprises later. We just need to know, because we end up putting an application in, and the bank would come back saying, what about this? Didn't know about that.
Right. So if I'm banking with a particular bank and I come to you and you find me the best deal, it happens to be with a different bank to my current bank, would there be an expectation that I would have to change my bank to the bank that lends me the mortgage?
Well, I would encourage you to do so. So my response to most clients is, do you love your bank? And they go, oh, I love my bank. Some of them love ASB because ASB had them from primary school. I mean, ASB's best marketing ploy was give savings books to little children, and they fall in love with the brand. Yeah. So my comment to all my clients is, don't waste your love on your bank. Love your cat, love your dog, love each other. Don't worry about loving your bank, because really you are one of thousands. You need to go where the money is and what works for you.
When you're buying a house, there's lots of ways you can put the title in, right? You can have it in your own name, you could put it into a trust, you could put it into a company. Do you give advice on that side of things?
Yeah, we do. And it's can be a really broad answer. So we can't give specific advice because everyone's circumstances is different in a video call like this. But sometimes a trust will work really well, especially if you're self-employed and you have a company. You definitely want separation between your personal assets and the company assets in case things don't go so well over here. So you want to make sure the family home's protected. If you're buying it, say, as, 3 individuals, you need to have some sort of formal arrangement between you there if you're going to all live in the house. Everyone needs to understand what the game plan is. And it's really important that all those hard conversations are had before anything changes, because it's all rosy and sweet up front, but life changes. People get divorced, people die, people get married or get into relationships. And if you're in this arrangement in a property with, say, 3 of you, one wants out or one gets married or whatever happens, what are you going to do about that? How are you going to share the value of the property now? Who's going to take responsibility for what?
Yeah. So would you work in conjunction with my solicitor over those sort of decisions?
We would give broad advice to the client and then say, you need legal advice, because we're not lawyers.
Yes.
There's key things we touch on. Do you have life insurance, which is important when you've got an asset to protect? Mm-hmm. Do you have a will, because you don't want to die intestate, because that's really messy? And you need to get legal advice if your situation's a little bit more complicated than just the usual couple going off or single person going off and buying a property in their own name.
Okay. So what's the quick process involved? I'm looking to buy a house and think I should come to a mortgage advisor like you. So what's the process? What do I do?
Pick up the phone, give me a call. We'll have a brief conversation over the phone just to ascertain your situation in broad terms to see if there is something there that can be done. Mm-hmm. And then basically we'll book a time to come and see you that's convenient to you, be it an evening or a weekend. Sit down for an hour, half an hour to an hour, go over everything, get all the information, and make an application on your behalf. So it's quite simple.
Yeah, sounds like it.
Sounds like it.
And it sounds like there's a lot of information there that you can help people out with in their buying their home. So if you'd like to find out some more and contact Jonathan Watts at Simply Finance, click the Learn More button below us, and he'll be in contact with you very shortly.